What's a smarter way to grow your money in the Philippines today? A government-backed savings program like Pag-IBIG MP2 or the timeless safe haven of gold? Should you buy gold to diversify your investment or just sticking with MP2 is enough for you? Both are sound, solid options. Which one gives you better returns for the short and long haul? In this video, let's simplify them so you can make better decisions as an investor. We'll cover how each investment works, their past performance, the risks, the cost, and what happens if you simply invest 1,000 pesos every month for 5, 10, and 15 years. By the end, you'll know exactly which one fits your financial goals or whether a mix of both is the smartest move. First, let's get to know our two contenders. Gold is a precious metal used for thousands of years as a store of value and an inflation hedge. You can invest through physical gold bars or coins or gold ETFs or exchange-traded funds through brokers like interactive brokers. Gold tends to rise in value when currencies weaken or during times of global uncertainty or if there's crisis. Over the last 5 years, gold price in Philippine pesos gained roughly 45% or about 8 to 12% annualized depending on the period. Pag-IBIG MP2, however, is a very popular savings program. The reason why it's very popular is because of backing by the Philippine government, and you can also open an account online with a minimum investment of just 500 pesos. Your money earns tax-free dividends, typically higher than regular savings account or time deposits. There is a 5-year holding period, but you can roll over or withdraw after maturity. You can also ladder your savings by opening multiple MP2 accounts. In 2024, MP2 paid around 7.1%. So MP2 offers steady growth, whilst the precious gold offers protection and higher potential gains, but with more ups and downs. Now, how do you invest? Investing in MP2 is easy. Open an account online or go to any Pag-IBIG branch. Link it to your bank for easy monthly deposits. You can invest anytime and even add lump sums. Dividends are declared annually and can compound if you choose to keep them inside the account. Investing in gold, however, can be done in two ways. One, physical gold. Buy BSP accredited bullion coins or small bars from reputable jewelers. Keep them in a safe or a bank deposit box, and you need to buy them from BSP accredited providers. The other option is gold ETFs or exchange traded funds. You can open an account with interactive brokers, which has accepted Philippine clients for years and charges no platform or inactivity fee. Search for tickers like GLD, SPDR Gold Shares, or IAU, iShares Gold Trust. Now, how about the fees? If you open an account with interactive brokers and invest in gold ETFs, the trading commission is about $1 per trade, and there's also admin charges of 0.25 to 0.40% automatically deducted from your investment account balance. MP2, however, charges zero fees and your dividends are tax-free. In short, MP2 is super simple and local, but gold offers more global exposure. But physical gold also comes with small premium over the market price, often 3 to 5%, plus optional storage costs like a safe bank deposit box. A safety bank deposit box can cost 700 to 3,500 depending on the size. They may even charge a percentage depending on how much the value of your gold. That doesn't include insurance, so if your gold is say worth 100,000 pesos, you might need to pay 1 to 2% insurance fees. However, if you buy a gold ETF, you need a brokerage account like interactive brokers that charges minimal fees and admin fees. Now, let's talk about the risks. For MP2, the main risk is that the future dividend rates could go down if Pag-IBIG's lending portfolio underperforms or if the economy slows down. Gold, on the other hand, the prices are volatile. They can fall sharply and stay flat for years, meaning you need patience and you have to invest for the long term. So, MP2 is stable and predictable. Gold has higher upside but requires a stronger stomach for price swings. Let's have a look at how these investments have behaved historically. MP2 dividends have averaged 6 to 7% annually over the past decade. Even during challenging years, it has remained very positive. Gold in Philippine pesos also remained very positive. It rose 45% over the last 5 years, which is about 8 to 12% annualized. Over 15 years, gold has delivered strong overall appreciation, especially during the global financial crisis in 2008 and 2020. So the big difference is that MP2 gives smooth, steady growth, while gold gives you spikes and dips, but the long-term trend is upward. Now, what happens if you invest 1,000 pesos every month? Using conservative but realistic estimates, MP2 at 7% annual return, gold at 12% annual return based on the recent peso performance. Your projected portfolio value would look like this. As you can see, the 5-year return is almost the same for both investments. But in the long term, by simply investing 1,000 a month for 15 years, gold could almost double the ending value compared to MP2, assuming if it maintains 12% annualized growth. So which one is right for you? I would say choose the MP2 if you want government backing, security, and tax-free dividends. You prefer a completely passive investment with minimal paperwork, and if you're saving for a medium-term goal like a house down payment or child's college fund. But I would say choose gold if you want an inflation hedge and crisis protection. If you intend to hold or invest in a long-term horizon and can ride out volatility, gold is best if you want to diversify beyond Philippine peso-based assets. Many smart investors combine these two. For example, you don't have to choose one. You can allocate 70% to MP2 for stability and 30% to gold for growth and protection. So if you're ready to start, here's a simple diversification plan. If you have 1,000 pesos to invest monthly, open an MP2 account at Pag-IBIG website or branch, set up an auto debit to invest 700 every month. At the same time, for the remaining 300 pesos, open an interactive broker's account to access gold ETFs if you prefer digital exposure, or visit a BSP accredited gold dealer for physical bullion. Set a target allocation, in this case of 70% MP2 and 30% gold. Then track your progress yearly to keep your mix balanced, or maybe rebalance your investment every couple of years depending on your goal. Two different investment options, but one thing is common for both. Consistency is key. Whether gold is up or down, whether MP2 declares 7% or more, the consistent habit of investing monthly will grow your wealth. When planning long-term investments, it's easier to look at real returns. Taking into account inflation, in the Philippines, inflation has averaged around 5 to 6% annually over the last 5 years and about 3.4% over the last 10 years. So, if we adjust this for inflation, MP2 7% annual nominal return results in roughly 1.4% real growth over the last 5 years and around 3.5% real growth if we use the 10-year average inflation. Gold, on the other hand, 12% annual nominal return results in roughly 6.5% real growth over the last 5 years and 8.6% real growth if using the 10-year inflation average. So what does this mean? For a 1,000 pesos monthly investment over 5 years, MP2 could grow to around 65,000 in real purchasing power, while gold could reach 75,000. Over 10 years, MP2's real value might be around 160,000, while gold could grow to 200,000. The takeaway here is that if you factor in inflation and long-term horizon, while both MP2 and gold protect your money, gold has historically provided a stronger hedge against inflation and can deliver higher real returns over the long term, though with more volatility. Having said that, will you choose the steady security of MP2, the shining hedge of gold, or a mix of both? Let me know in the comments how you're building your financial fortress. If you found this video helpful, like and subscribe so we can grow and invest together. Thanks for watching, and here's to making your hard-earned pesos work harder the smart Filipino way.